sliding into Friday like this. Good morning. Good afternoon. As the case may be. Chris and Lee, 1, 2, 3.
Dude, why do you keep it so cold in here?
Because the colder it is, the harder you work.
Is that how it works?
I don't know. That's what one of the guys we used to work with used to say that all the time. The guy that used to talk like that real deep. He used to fight birds.
Oh, shit.
Michael. Michael taught me that. Hey guys, you know the routine. Come on in, have a seat. Ask questions about real estate. Ask questions about lending. Ask questions about programs, interest rates, credit scores, down payments, all the above. Everything having to do with home loans, guys. Make sure to reach out to us. Make sure to ask the questions. We will answer them here, live. Thank all of you for joining. Oh, there's a bunch of people coming in.
Is there?
Stewie, Taco Dom's back. What's up, Taco Dom?
Taco Dom, what's up, Taco Dom? I don't got the count right there.
That one don't matter.
That one don't matter? Okay, cool.
It's this one.
All right, let's go. Let's go. We're on all the platforms. TikTok, Instagram, YouTube, and Facebook.
I don't want to lose sight of what we were talking about. So you were talking about the numbers that are coming out and the stuff that doesn't seem very good. It actually is not. It's bad. The numbers are not coming in good.
Yeah,
and the
bad.
Falsified numbers.
Yeah, they're pretty bad.
Falsified numbers.
But there might be a tech issue because look at the count there.
Who is messing with my tech?
I don't know, dude. I don't even know. Does it say something right there?
Who's out there in Instagram world? Who's in TikTok world?
What's up in TikTok world?
Who's in
What's
YouTube?
up in Instagram world?
Who's on Facebook?
Facebook world.
So help me, man.
World.
Help me.
Help you with what?
Okay, so you were mentioning that there's these fake job postings.
Yes.
And the purpose of the fake job postings is to bring morale to the company as if the companies are doing well and they have intent on getting new employees but don't.
Mm-hmm. We might want to relaunch that.
We want this one?
Yeah.
Okay. All right,
Yeah,
guys, we'll be back in a second.
We're having a tech issue. They've either canceled TikTok or we got banded again. Banded again. Okay. Here we go. Let's do this again. So, question right there. Go. Instagram question, Facebook question. Let's go with the Instagram one first.
Taco Dom, what's a non-borrowing? We were conventional, but we went to FHA due to better rates. Now we have to add my wife as a non-borrower, non-occupant borrower. That's what you're talking about. Or actually non-borrowing spouse. Sorry, that's NBS. So what that is, here's what it is, Taco Dom. FHA is a government-insured loan. All the Fed loans, USCDA, FHA, VA, they all ask that if you're in a community property state, and I think you're here in California, is that right, Taco Dom? This is a community property state. So you have debt, so does your spouse. It's both of your debts. You have money, so does your spouse, both your money. Okay? So they have to include them both if you're legally married in a community property state. If you go, okay, Texas is a community property state. It's another one of those states to say, hey, your debt, his debt, her debt, your debt, money, all the same. So that's how it works. If you want to get around that, conventional is pretty much the only way if you're going to go with the lower down payments. But that's the answer, Taco Dom.
Yeah, and then why would they switch you from a conventional to a FHA because of rates? Because here's something that you probably don't know. On a conventional, the MI is priced based off of your credit score. So if you have a great credit score, your MI gets smaller. FHA is kind of in the middle of the road, and it 0.55 for 3.5% down or 0.50 for anything more than 5% down. So the way that works out is called your interest rate and then your net effective interest rate. So if I price somebody today and I got 7% FHA, and then I priced and I got 6.875 conventional. Well, on the face, it looks better. Wait a minute. I got flipped that around. 7% conventional. I got 7% conventional and then priced it and FHA 6.875. It looks better, but once I add the 0.55, that's going to blow way past 7.125 on an FHA for your net interest rate. So if you're flipping, you got to really understand the differences in the MI and the actual net MI costs. Now, there are some advantages to conventional because it will go away over time, and then your MI can be removed at 80% or 78% LTV. All that stuff can happen, but you got to really understand the difference between the MI and this. The count is horrible.
Next question. What is MI and how does it work?
Okay, so MI is mortgage insurance, okay? And this insures the lender in the event that the borrower defaults. So so when you get a loan, the bank says, hey, you got a lot of money, you're putting 20% in, we don't think you're going to default, you're in this with us. But if you're like, hey, I'm not going to put a lot in, I'm going to put 3.5% down, they're like, wait a minute. If the market goes down a little bit, you can walk away and I'm screwed. So in order for me not to be screwed, I'm going to make you buy insurance in order to get this loan. You have to, you have no choice. So if you go FHA, FHA's already set a standard. It's 0.55 on all loans with 3.5% down. 0.55, it's set. If you put more than 3% down, if you put 5% down, then it goes down to 0.50, a little bit of difference. But it's guaranteeing the lender in the event that the borrower defaults. Okay, so that's if you go FHA. If you go conventional, which is Fannie Mae and Freddie Mac, if you go conventional, then the MI is actually shopped. We shop it to a whole bunch of MI companies that shop mortgage insurance. And when we shop the MI, your credit score really comes into play. Because if you've got a 800 FICO score, then your MI is real small because they say, hey, listen, you've been really good and responsible with debt. And because of that, we're not going to charge you a lot. But if your credit score is not that good, like 640, 620, that's not really great. But 620 or 640, your MI is going to be really high, sometimes higher than the FHA of 0.55. I've seen MIs, like my highest MI is probably 1.87. What was yours?
Yeah, probably in that range.
1.87. So remember, FHA is 0.55, but your conventional can come in at 1.87. And this is only when you dig in deep into the loan that you understand this stuff. So you have to find out what your net effective rate is. Then you have to figure out your long-term plan. Because if your long-term plan is you're going to refinance in about 2 or 3 years, well, then you want to consider that MI because the idea or the inclination is to buy the rate down right away.
Yep.
And it's not necessarily the best idea if you're going to refinance because you're going to spend a lot of money to buy the rate down and then get rid of that loan that you paid for a lower rate in a year or two. It doesn't always make sense.
Taco Dom said, think that's why we switched to FHA because my FICO is 660. 650.
Yeah. So your LO should be able to break this down for you like really good. Like math it out exactly down to when are you going to refinance, how long are you going to be here, here's what we believe the rates are going to be in a year, here's what's going on with the market. Because I'll tell you right now, anybody who's getting a loan today, anybody, if you're in 5, 6s, or 7s, 5, 6s, or 7s, a year from now, you're going to refinance. Nobody's going to keep a 5, 6, 7% rate, and the banks know it. And they build the profit in the beginning because they know it. What's the account? The account's still saying horrible on that one, and I don't know if it's reflecting right straight through.
I have no money, but definitely want to buy a house in Texas. How do I go about that?
Well, there's down payment assistance programs in all states, basically all states. I haven't found one without some program. Every state has some program. They're a little bit different in different states. Some of them give you like a $500 grant. Some of them give you relievable second mortgage. There's one that every year on the anniversary of the thing, they remove 10%. So if you've been there 10 years, it disappears. But if you refinance prior to that, you have to pay off the remainder.
Patty Cakes. What's up, Patty Cakes?
What's up, Patty Cakes?
I
If I have BK, can I get a second mortgage? What do you think?
So BKs have to be seasoned, okay? So here's what that means. Can you have a bankruptcy in your past? Absolutely. So a lot of people have this idea that the BKs fall off in 10 years. Okay?
What's up, KK?
What that means is nothing when it comes to buying a house. Because if I pull your credit in 12 years, BK is probably still going to be there. You're probably still going to be able to see it.
Yep.
Doesn't affect you. So For FHA, you must have been outside of your BK for 2 years. So you get something called a discharge date. This is the date that it's done. 2 years from that date, patty cakes, you could buy a house FHA. 4 years if you want to go conventional. So that's the answer. But when was your BK? And I can give you the exact date.
And was
KK
it a
in the
BK?
house.
Was it a BK7 or a BK13?
Let's bet on it. I'm gonna say it's a 7.
7. Well, 13 means, hey, this is too much debt for me to pay all at once. I'd like the court to entertain giving me a payment that I can afford. That's a 13. BK7 is, I'm done. Screw this shit. I'm walking away from everything I did. I want the court to just pay for everything and give me whatever I get. So, BK7, BK13. 13 is a responsible way to deal with debt, and because of that, the banks understand it, and they will let you refinance while you're in the 13, like literally in the middle of the bankruptcy, but you're saying, I want to deal with this stuff responsibly by giving me a payment plan that I can pay all these people off instead of one that buries me. If you go 7, you just walked away, and the bank said, okay, if you just walked away, we know what you're going to do. So we're really reluctant to lend you money. Very reluctant. So much so that if you walked away, Fannie Mae and Freddie Mac say, 4 years minimum. 4 years minimum. You can't, we don't know, we're not going to lend you money. No, it's hard in the guideline. No, we're not going to lend you money. Fannie Mae and Freddie Mac.
Patty Cake said, well, what if I have a house and need a second? I have equity and it's a 7. So when was that 7 discharged, Patty?
Discharged or filed? Discharged or filed. That's the key. What else we got there?
No, I don't want to know filed. I want to know discharged.
Yeah, that's what I'm saying. If you filed it, doesn't matter if you filed it, because it's all working its way through the court system until the judge drops the gavel and you're discharged. Once you're discharged, that's my date I go off of. Because people like to tell me, hey, you know, I started my bankruptcy in 2022. And I'm like, yeah, okay, cool. I just pulled your credit, and it says the discharge date was January 24. They're like, yeah, but I started it in 2022. I said, I don't give a shit when you started. It doesn't matter. The only thing I care about is discharge date.
Brand new home buyer needed to know what to do. Point me in the right direction. Okay, so brand new home buyer. Here's what you're going to do. You're going to start by calling us. Okay, so if you want to put in an application, you're going to take a screenshot of this right now. Okay, and then during this time, what you're going to do.
It pauses.
It pauses when that happens?
During this time, what you're going to do is text us. There's a phone number here. We've got a phone number here. And you're going to text us the platform that you're on. What that's going to do is going to let us know that you're interested, and we can talk to you and send you applications and all this stuff. If you just want to get started, you just go to our bio, click on the link, and click on Apply for a Home Loan Now.
Yep.
So for a first-time home buyer, here's what you're going to need. 2-year work history, okay? So you're going to have worked for the last 2 years. Now, some people have changed jobs. That's okay. Some people have gaps. Maybe it took them 2 weeks, 2 months to get in that new job. That's okay. As long as I can calculate 2 years going backwards, even during the C word, if you had time off during that, I could still make it work, because if you had 2 years prior to that or 1 year prior to that and you have 1 year after, we can always marry that together. So 2-year work history. The third thing you need, or second thing you need, is credit. So you need a 580 or better credit score. So if you have a 600, 700, 800, that'll all work. 580 or better. And then the third thing you need, down payment. And if you don't have a down payment, we have programs to cover that. Hope that helps. Joe.
Oh, Krill, do we have CRM? CRM, Customer Resource Managers, what I see when you say CRM. We do have, basic CRMs. We got Lions Desk. We got one inside that's NAF proprietary. We got CRMs. I don't know if that's what you're asking, but yes. Go.
I thought you were reading, man. What is the credit score for a refinance or home equity credit? Dude, are you changing the platform on this?
No.
I
I'm
read
trying
the
to figure
questions,
out,
you
yeah.
answer them. I
what
answer some of them. But I'll take this
Okay,
because
go
you're
ahead.
tired. It's a late night, guys. Joe, what is the credit score for a refinance or home equity credit? So the programs that we use are usually about 680 or better. A lot of the seconds right now are asking for 700s. HELOCs are actually asking for the lower credit scores. A second means you're taking a whole other loan next to your first loan that has a term, which means that this is going to get paid off in 10, 20, 30 years. A HELOC is like a credit card, okay? Credit cards aren't asking for the higher credit scores. The loans are asking for the higher credit scores. So 680 and above is what you're going to be looking at. Do you guys do deals in Pennsylvania?
Yes, we do. We do deals in all 50 states. All 50 states. By the way, here's the quiz we give everybody. How many states are there in the United States? I'll give you a hint. We do business in all 50 states. You answer, you get a prize if you win.
So
the prize is you get to work with Chris.
That's what I was going to say. 52 patty cakes wins. You don't win patty cakes.
You don't win patty cakes. There's 50 states. 50 states. I don't know if you're joking, but there's 50 states. We do business in all 50 states.
Patty cakes is joking. Where do you live, patty cakes? What did she say?
Cool. So what? Now we're jumping all around, dude.
So what is the HELO looking for? Has to credit.
What is the HELOC?
680.
680. 680 is kind of the rule. By the way, there's a lot of companies that are popping up right now. Ooh, there goes the count. They're popping up right now, and they're saying, hey, listen, instead of getting a HELOC, how about I just give you cash, and we participate in the growth in your house's equity? And I'm like, that's called a second lien, and that's scary. Because that's like somebody saying, hey, you want $10,000? Don't worry about paying me back. I'll get it back later. Trust me, I'm going to get back later. And I'm going to get everything that I deserve, that I want. It's a little scary. I'm been very interested in this. I haven't gotten any of them, but wow, look at the count. I've been very interested in this because I think there's a scam involved there. By the way, National Association of Realtors, oh my God. Oh my God, you hear? They settled today.
Tell us.
I think it's a $400 million lawsuit. The National Association of Realtors said, hey, you know what? We're settling. We're just going to write everybody a big fat check. And they're like, whoa. And then I have like 10 realtors that have already texted me going, hey, what does this mean? What does this mean? What does this mean? What does this mean? And I'm sitting there going, oh, so if you don't know, this is how it works. So the National Association of Realtors, what they do is they say, hey, listen, listing side or the seller pays all commissions. They pay for the buyer's agent, they pay for the seller's agent, they pay all commissions. And this is the way it's been traditionally done. However, this is a bit of a problem because it's a conflict of interest. Why would the seller pay for the buyer's realtor? Why? And you know how much they pay? 3% on the front end, 3% on the back end. 3% for buyer, 3% for seller. That's rough. In the news, they say between 5 and 6. It's been my experience, 6. Like 80% of the time, it's 6%, 3% to buyer, 3% to seller. So that's a very important thing. Now, what does that mean now?
Hey, Jeremiah. Hey, Rebecca.
What's up, guys? What does that mean if the seller is no longer mandated to pay for the buyer? Ooh, it's going to rock the world. It's going to rock the world of the realtors. Why? Because let's say you get a realtor and you're like, hey, I want you to be my realtor. The realtor's like, cool. You owe me $15,000. Like, what do you mean you owe me $15,000? Well, you're looking for a $500,000 house, right? And I'm going to charge you $3,000. Before I start putting you together, you owe me $15,000. You don't have to pay me right now. You can pay me at the close, but you owe me $15,000.
All right, real quick. Jeremiah Melendez, want to downsize but don't want to sell my current home. What's the best way to do this?
That's a good plan.
That's a great plan.
That's a great, Jeremiah. How long you been in that home? What kind of loan is on it? Here's why. Because if you rent it out, like today, you rented it, and you rented it for more than your current mortgage is, I can wash out that mortgage like it doesn't exist. If you've been renting it for 2 years, I can give you the profit. But you need landlord experience to get profit. I don't need landlord experience to wash it, though. So, if you rent it out, and we move forward, wash it out, that's the best move. The reason I asked what type of loan is because if you're in a conventional loan, you can go FHA 3.5% down on your next property. If you're in an FHA right now, probably can't. If you're going close. There's a few instances where you can, but probably can't.
Yeah. Rebecca German, what credit score do you need? Springfield, Massachusetts, with the Simpsons.
I love Springfield.
Yeah. Homer, Marge.
Springfield. Probably hear that all the time.
No, she doesn't.
Springfield. Okay, so credit scores, real simple. FHA, 580. Conventional, which is Fannie Mae and Freddie Mac, 620. USDA, what do you say on USDA?
580.
580. VA, no credit score, doesn't matter. Doesn't matter. Even if the banks tell you it matters for that bank. But the VA guidelines, doesn't matter. So there's your credit scores. However, if you got a lot of money, you can get away with 500 FICO score. Funny thing about having a lot of money in our system is it really works in your favor in almost everything except child support.
How many people actually rent their house and then go buy a new one?
Oh, what percentage of your buyers do that?
I would say 1 out of 10.
I'm going to say 20% of mine.
2 out of 10?
2 out of 10. 2 out of 10 do what's called a contingent, or not a contingent. They rent out their house because they're doing a move up, and they say, hey, listen, I started out with this little house and my family just grew too much, but I don't want to get rid of it, so I'm going to rent it out and then go buy another one. Easy.
Why would someone
easy.
do that? I mean, well, let's go back to Jeremiah. Why would someone want to do that?
Oh, I have a kid right now, and I have a kid. Did you know that?
Right now? I thought you had him for like 20-some years.
Over 20 years. And he's like, hey, Dad, he's like in his 20s, early 20s, and he bought a house. And I'm like, hey, cool, here's what you're going to do. And he goes, listen, I want to sell this house and buy another one. And I said, okay, do you want some wisdom? Here's some wisdom from somebody who's played the game. Don't sell the house. And he goes, well, why, Dad? I'll get a lot of equity. I said, yeah, but if you get a lot of equity, you're going to have a one-time shot in life where you make 20, 40, 80, 200 grand or whatever. You're going to move it on, and then it's not good. Here's what you do. Rent that out, bite the bullet, and put a new down payment on a new house. And why would I do that? Because after a certain number of years of doing this, you wake up and you have 8 properties. And all these 8 properties, because somebody else has been paying your mortgage, have been paid down the whole way through. You've gotten tax benefits, and now you're independently wealthy. Wait, what? What? So Jeremiah says 3,000 square foot home, all the kids left, just my wife. So that's a downside.
Empty
Yeah,
nesters.
that's a downside.
Congratulations,
yeah,
Jeremiah.
that's even better because the new house that you're going to get is probably going to be cheaper than the house you're leaving. Maybe. I don't know.
Rebecca Germain again, 580 with no money down? Question mark.
Probably not. Yeah, you probably, Rebecca, I hate to tell you this, but you earned your 580 FICO score. Somebody lent you money and you didn't pay it back on time. Or you didn't pay it back by the terms. Or you did something and you have earned that 580 score. And then you go to a bank and say, hey, it was Verizon's fault. It was the electricity company's fault. It was this. The bank's not going to lend you $500,000 after you've been doing this. Your credit will follow you for 10 years. I pull credit on people every day. Every day. I hear all the stories in the world and I say, listen, I don't care what got there. I don't care. All I care is this is where you're at. This is where we need to go. Let's get there. I don't care what I was a dumb kid too. I walked out on electric bill when I was in the Navy.
That's the only dumb thing you ever did?
Oh no, I've done a lot of stuff. But I walked off on an electric bill when I was in the Navy. I was like, what are you gonna do? Chase me? $300, no big deal. I left it was in San Diego. I left San Diego and I didn't think, whatever, and it didn't bother me. For 20 years later, I moved back to California. They're like, hey, yeah, we remember you. I'm like, yeah, can I get some electricity? And they're like, there's this thing. You walked out on us 20 years ago. I was like, yeah, but that was 20 years ago. You know, we're friends now. Bygones be bygones. They're like, yeah, we're friends, but first thing I need you to do is pay that with interest. I'm like, shit, I guess. Here you go. And second, we don't trust you anymore. So you need to give us an $1,800 deposit. I said, $1,800? Are you crazy?
For some light and some heat?
And they're like, yeah, we trusted you once, and you showed us what you would do if we trusted you. So here's the good news. After a year of paying us on time, we'll give you your $1,800 back.
Holy cow, Rebecca's credit went to a 593 in the last 6 minutes.
That's badass.
Rebecca's kicking butt.
And so, Rebecca, I tell this to everybody. We're all young and dumb at one point, or you hit a hard spot. I know a lot of people that didn't want to default on their debts. They just lost their job because their business went down because of the crash, financial crash. I'm in finance, so I know a lot of people in the crash that in the financial crash are like, hey, I used to be a millionaire. Now I got a 480 FICO. I'm like, all right, cool. I got it. Yeah, got it. Okay, so that's where you're at. Now let's fix that. Let's fix it. So all you have to do is go to work and fix it.
So Rebecca, with the 580, you can buy a house right now.
Yep.
You can get a house with units
Yep.
right now, as long as you pay your down payment and have a little bit of cash for reserves.
Yep.
But you're not going to get into a program. Program's going to need 600 starting, but honestly, you're going to need something more. You're going to need probably a 660 or better.
Yeah. And if there's anything recent, just because even if you had a 593, but you have 3 credit cards that are recently 30 days late, because we get to see, like right now in March, if I pulled credit, it would show me if you were late in February. It would show me if you were late in June of 2017. I would know exactly you were 30 days late, 60 days late, 90 days late. It's just a little tick mark in a box, and we figure it all out. But the algorithm factors it all in, and it doesn't go away. It stays with you. So keep that in mind.
So what can you give Rebecca right now that'll help her scores in the next month or so?
Okay, so Rebecca, credit has no memory. No memory. It doesn't remember yesterday that you didn't pay your bills on time or you did. It doesn't. So every time I pull the credit, whatever is there creates the credit score. So here's what you do. You go to mom and dad and you say, hey, mom and dad, I would really like a favor from you. And they're like, what? What would you like? And I say, here's what I like. You know that credit card, that 800 FICO score you have? Yeah. Can you add me as an owner or an authorized user on your 800 FICO credit score? And they're like, what are you going to buy? You say, I'm not going to buy anything. I don't even want the money. I just want to be an owner of a FICO of 800 that has 10 years of on-time payments. Because once you do that, my credit score is going to spike 60, 80 points like that. And they go, well, how do we know you're not going to spend my money? And you just say, well, when the credit card comes in, because I'll have it shipped to your house, just shred it. I don't ever need to spend it. I just need to have the history that I'm an owner. So the minute they add you as an owner or authorized user, however long that card's been there shows up on your account now. And it shows that you've been paying this thing for 10 years on time, and you have an 800 FICO score. And your score will boom, right to like that.
Boom, and then you're getting a house with units.
What?
You're going to get 640 or better, Rebecca. Yeah. Get to a 640 or better.
Yes.
Ms. Fatash says, what about 702 credit score?
You're golden. You're in. So once you start, like 620 is a starting for Fannie Mae, Freddie Mac. And by the way, you will not get good pricing with 620. The pricing, because the next thing is, hey, I heard about these great interest rates. I'm like, yeah. Do you have that great credit score? Well, no, but it's not that bad. It's 623. It's not that bad. It's qualifying, but it's like D minus, because F is 619. D minus is 620, 630. And then D starts going into 650, 680. You're not really A paper to your 800s. So 700 is your golden because you're past that 6s, you're into the 7s. Let's make it happen.
Rebecca said, that sounds great. Time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officer, Chris and Lee at New American Funding, by dialing the number on the screen. We are here for you. Call us.
All right, dude. Tell me about what interest rates. Oh, what are interest rates going now? 709 credit score. 790s?
Jeremiah. The only way for us to give you an accurate quote is to pull your credit, calculate your income, and build your file. That's how we give you an accurate quote. But the world likes the flashy shit. So New American Funding's putting out, hey, listen, we'll do a 15-year at 5.625. 5.625. What? 5.625. Or a 30-year at 6.25 conventional. 6.25 conventional. FHA, 5.75. VA, 5.75. That's the flashy thing that New American Funding puts out to the world. Don't believe me? Go to the top links, and you can see by going to cool stuff, and you'll see today's rates.
Navy Mom said, Lee, what is on your shirt? Question mark, exclamation, exclamation, and this face.
Poseidon. Poseidon, yeah. It's Poseidon. Our tech crew that comes in and fills our films.
Oh, is that what it is?
Our TikToks. They're like, I'm not coming in today. I'm like, yeah, it's Friday. I'm just wearing something.
Your pajamas?
Yeah, I'm wearing pajamas.
Miss
I'm wearing
Green.
pajamas today.
I recently bought a car and my score was 850. But they use a different score for mortgage? Question mark?
Correct. That's absolutely correct. If you,
Still a bad score.
850 is good, but you're probably not using FICO. Probably not. Why? Because 850 is perfect. I've never seen a perfect score. The highest score I've ever seen, and I've been pulling credit. Yeah, doesn't mean it doesn't exist. But the highest score I've ever seen is an 846. That's the highest score I've ever seen. But there is another credit cycle or vertical. What is it called? It's not FICO. It's
I don't know.
It's another
Fair
score.
Isaac?
It's no, that's FICO. It's another credit rating company, and the cars use it. Automobiles use it, but it's not the mortgage one. Mortgage, we use FICO, and particularly we use FICO 8 or FICO 5? FICO 5. So it's a big scam. It's a big game that the credit reporting agencies do, and they say, hey, if you really want to know if this guy will pay his mortgage on time, buy our service of FICO 5. Oh, no, you want to know if they'll pay their car on time, buy our service of FICO 3. And then somebody else out there says, hey, we're not FICO, we're this. And then they give you a different score. Theirs goes up to like 900.
But I am going to say that Miss Green is going to have a fantastic score based on my experience. I'll give you my personal. Personal. So when I did my credit card app like everybody else does, it was 796. And then when I actually pulled it for mortgage 5, it was 807. So it was actually a little higher.
Yeah. Okay. Cool.
So I think Miss Green's going to be golden.
Yeah, I think so too. If you've paid your bills on time and you've done things correctly, it's going to reflect on all the scores. All the scores. If you haven't, it's going to reflect on all the scores. Remember, I deal with so many people about credit scores. Credit is very important in your life. And if you're the dumb kid who says, I don't care, what are you going to do? Chase me? They don't have to. You got to come back to them.
They will chase you.
Yeah, they don't really chase you. You'll come back. And then when it's time to buy, they're like, hey, remember that thing you didn't pay on time? Boom.
Miss Jen and Miss Jen, same person. Recommendation of where to see my FICO 5 without a hard inquiry.
Miss Jen, the only way to do it is with a hard inquiry. That's the only way.
How do I make a bunch of money without hard work?
Yeah, how do I get rich without doing anything? I just want to set it and forget it. I just want to have $10,000 a month coming in. That stuff doesn't exist.
How do I win a Super Bowl if I'm the Cowboys?
Let me tell you why. There's going to be some loan officer out there that says, hey, we'll do a soft pull. Well, here's a soft pull. A soft pull is I got 3 credit reporting agencies, 3 of them, and I'm only going to pull 1. But if you understand how the system works, this is how it works. We pull all 3. We do it's called a tri-marriage. We pull all 3. We get rid of the high. We get rid of the low. We keep the middle. Well, if you only pull 1, let me give you a scenario here. If you only pull 1, let's say I pulled your FICO and it came in at 630. 630 sounds good. I tell you, hey, we're good to go shopping. But your other 2 are 616 and 618. But I told you you're ready to go shopping because of the soft pull. It's not real. It's a joke. The only way for me to know is to do a hard pull tri-merge. And people are always worried about your credit score is going to drop. It's not going to. It might drop a little bit, but probably not. Probably not. And at least you have a real accurate assessment of where you're at. I tell people, hey, listen, I'm not going to push you to pull your credit. I don't give a shit. I got somebody right behind you that actually wants to buy. But if you really want to know where you're at, let's pull your credit. I'll tell you exactly where you're at. I'll even send you a copy of your credit report if you want. And then we can work on fixing it. If not, you're just going off my bank said this, and my app said that, and Credit Karma said this, and Free Credit Report that said this. Who do I believe? I'm like, you're not really serious. When you're serious, I'll do a tri-merge. We'll figure it out, move forward. Until then, keep watching. You can learn a lot.
Hey guys, I want to get more people in here asking questions. Can you please give us a bunch of hearts, likes, and shares right now? Hearts, likes, and shares from all platforms.
Heart us up. Let everybody know we're trying to get you a home in 2024. We are on TikTok, Facebook, Instagram, and YouTube. I love TikTok, but it might go away. I don't believe it's going to go away, but it might go away. Congress just passed, hey, we're banning TikTok. They didn't actually ban TikTok. The technicalities of it say that you can't update the app. That's the technicalities of it because it's owned by a foreign government. And then the rule on it is that. But if it makes it through the Senate, it's going to get weird. And I think Supreme Court's going to step in and go, sorry, unconstitutional. Because that is stepping on freedom of speech. I think that's how it's going to go. Of course, I am not appointed to the Supreme Court. And even if you were appointed to the Supreme Court, you're not going to agree on everything. None of them are going to agree on everything. None of them do. Except one thing. Trump belongs on all the ballots in all 50 states. They all agreed on that.
Wow.
They all agreed on that.
Caroline.
Yeah.
What is required to take out a HELOC? My credit is low, but my partner's is high.
My partner? Oh, my partner's okay.
My partner's high right
Yeah,
now.
my partner's high
He
as
can't
a
ask
kite.
questions.
Dude, he's high as a kite. You don't even know. He's freaking high. Yo, you turn it
hot
warm and
here.
then hot and then warm and then hot? What are you doing? So, HELOC is usually 680. 680 FICO score, usually 680. And because it's a riskier loan, and there's also DTI and LTV issues. LTV means loan to value. People are like, hey, my house is worth $500,000 and I have a $400,000 first. I'd like to take $100,000 out. Not going to happen. Not going to happen. Not going to happen unless you're a veteran. If you're a veteran, might happen. Might happen. Because we can go 100% LTV on a VA loan.
What if I got a divorce 2 years ago? We used to own a home. Can I still buy a house?
Maybe. Probably yes, depending on what you guys did and if you defaulted on that thing, if you foreclosed on it, if you walked away on it. If it's just a divorce, it's just life. Life happens. And you got a divorce. Okay, cool. You're now your own entity. How's your credit score? What's your down payment? And what's your yearly income, monthly income? Either way, I can figure it out. What do you got, man? What else you got?
Okay.
What do you think about the NAR lawsuit?
Well, it's gonna change real estate. It absolutely. But everything needs an adjustment every now and again. A lot of people believe that I've heard that real estate agents, loan officers, real estate people in general make too much money on these transactions, which might be the case.
Well, I'll tell you what. When things are good, we make a lot of money. We do. Realtors, good, high-producing realtors and high-producing loan officers make a lot of money. Like a lot of money. More than the average person across America, they make a lot of money. When times are bad, even the high producers, they don't make a lot of money. Like, they do not make, they make very little money. If they can stay in the business. How many loan officers do you know left the business?
I know
Yeah.
a lot.
Like, you actually personally
That I know.
Yes.
Okay.
A lot.
I'll give you 10 just off the top of my head.
I can give you
And
probably...
that's who I know. I don't know a lot
Yeah.
of people.
I probably 15. How many realtors have left the business that you know?
Oh, that one's higher. That one's 20, 30 in that range.
Yeah, 20, 30. Yeah, I'd say more than that.
And
But
that's
yeah.
who I stay in contact with.
Yeah,
I don't know who
yeah.
the rest are.
Yeah. So it's when the idea of being paid commission is when you do very well, you do very well. But when you don't do very well, you starve out. I mean, I know a lot of loan officers left the business. Like, what did the news say? 80,000? I think it was 80,000 left the business. 80,000 loan officers last year left the business because every year you have to redo your fingerprints. You have to reapply to the FBI to make sure that you're still good to be involved in finance, and you have to pay $300 to $500, and you have to do continuing education credit. So it's a profession. You should have to keep up to stuff. A lot of them just said, nope, not going to do it. Not going to do it. Can't do it. It's just expensive. Yeah, it's just pricey and expensive. So the new NAR lawsuit came in and said, hey, listen, $420 million so far, $420 million that NAR is settling on.
What?
And they're just saying, hey, listen, yeah, we probably shouldn't have done it that way. So here's $420 million. We're friends, right?
But things stay the same?
No.
So what changes?
The listing agent can no longer the seller can no longer be required to pay for the buyer's agent, which sounds logical to me. I mean, that's always been logical. But NAR has this political arm that's unbelievably strong. They've always been politically strong. In fact, in our business, we have something called the Mortgage Bankers Association, MBA, and they kind of chastise the loan officers. They're like, you guys should be putting more money so that we have more political pull. You have believed how hard they beat us. They're like, hey, did you contribute enough? You should be contributing more. You should be, look at what NAR does. You should be contributing more. They beat us up. I mean, not kidding. I've been at 3 different banks.
And it's true.
And every single bank is like, hey, can you contribute more? Congratulations. And they even do a version of shaming. They're like, hey, these loan officers contributed. Are you gonna contribute?
I don't see your name.
I know. It's to me it's dirty. It's just dirty. But it's politics. It's how it works.
So walk this down for me, okay? Mm-hmm. So you're buying a $200,000 house. Mm-hmm. 6%.
Okay.
So $12,000, right?
Mm-hmm.
Okay. So the house is the comparative market analysis says this thing's worth 200 grand.
Okay.
So now the buyer, who was going to pay both sides anyway.
No, the seller was going to pay both sides. Seller.
Oh, I'm sorry.
By the rules.
No.
I know what you're saying.
Yes, that's what I'm saying.
I know, yeah.
So they would have paid both sides anyway, and now they got to pay that another $6 grand on top of that if they're going to charge 3%. Let's just say. So now they're buying a $200,000 house. They're buying a $206,000 house.
Worse. It gets worse. No, because it's not going to be 206. Market is still the market. It's still 200,000.
It's two, yeah.
Yeah. So the listing agent says, "Hey, I'll take the listing for 3%." So that's 200,000. It's what, $6 grand? Okay. So I'm gonna take the listing for no, it's not $6 grand.
3%, $6 grand.
Okay, 3%, $6 grand. So I'll take the listing for $6 grand. Cool. The buyer's agent says, "Okay, how much are you gonna pay me?"
0.
Why would I work for you?
No. He's asking the seller or the buyer.
So you're a shopper. Our people that are watching us right now, they're like, "Hey, I want to go get a house."
Okay, that's a buyer.
Okay, so now they go to the realtor.
Which one? Listing agent or buyer's agent?
Buyer's agent.
Okay, got it.
So they go to the buyer's agent. They're like, "Hey, I think I want to get a house."
Oh, so the buyer agent gets cut out and they go straight to the listing agent.
Correct. Or they say, "Hey, listen, I do, Mr. Joe Smith, Mr. Joe Smith, I want to hire you." And he says, "Okay, cool. You're gonna pay me 3% no matter what." Well, what do you mean 3% no matter what? Even if it's not in the deal, you owe me 3%. We haven't even found anything yet. You're already charging me? He goes, yeah, and it's not cheap either. It's $6,000. You're going to charge me $6,000 and we haven't even looked at anything? That's correct. Yeah, that's correct.
Are you an attorney?
Yeah, that's where, because in Texas, it does work like that.
Yeah.
They're represented through attorneys. So I think it's going to all land up going that route, like attorney type stuff. So now you're the buyer, and you're like, "Hey, I need an agent. That guy wants to charge me 3%. He wants me to sign a contract saying I'll pay him no matter what. What if I don't want to pay him or I can't afford it? What if I don't find something?"
That's the reason why I don't have a Ferrari right now.
Yes. And see?
Same thing.
What would you do?
So, I mean, if
it has to find its balance.
If you can afford to buy a house, you can afford to buy a house. If you can't afford to buy a house, you can't afford to buy a house. So is there going to be a new program that they roll out to pay the agents?
Well, this has been kind of...
No.
I actually think that this could be good for us. Because if they come to the lender first, if they start coming to the lender first, and we tell them, "Hey, listen, I got a realtor that will do this," then they trust us first. We did the financing, and we kind of run the show with them. Because the way the business works right now, the realtors send it to the lender largely. Unless you got a big footprint like we do. So we get the clients, and then we send it to a realtor, which is the opposite of how it normally works. But I think this is going to be the norm for everybody, which could actually amp up the banking side. I don't know. There's a lot of things to work out here.
Crazy, man.
It is kind of crazy.
Well, you have the interest rate situation. You have this buyer agent situation.
Don't forget about that little orange man versus Sleepy Joe.
You got an election this year.
Yeah.
I mean, so much. The 2 wars going on.
Yeah, there's a lot of stuff going on here.
Congress is talking about TikTok.
Yeah, well, that's a crazy one too. Because
Like,
we're on TikTok right now. Like we're on Facebook, Instagram, TikTok, and YouTube. And TikTok right now. So this thing it's so strange, because they're saying, "Hey, they have access to your data." Okay, that's true. And I don't like it, but it's kind of what you pay. It's like, "Hey, I live in a free country. When I go to Texas, people smoke in the restaurant. I don't like it, but really, I cannot go to that restaurant." That's it. That's the way it works. In California, less freedom, and every restaurant I go into, no smoke. But I don't know if I like that trade-off for the freedom. It's difficult. It's a very difficult, that's a difficult line. So what they're saying is that they have access to our data. And I will say that so does Facebook, and so does Instagram, and so does X, and so does Rumble, and so does True Social. They all have access to our data. That's what they've been selling our data forever. Now, their argument right now is, "Hey, well, listen, the Chinese CCP, Chinese Communist Party, has access to the data." And I say, maybe. But if you actually understand how the corporation is owned, most of it is not owned by the CCP. It's a publicly traded company, and most of it is owned by hedge funds all over the globe. Not one. It's not like China sitting back there going, "Ha ha ha, we got all their data." Can they say we need access to that? Maybe. And with that, I say, okay, there's a little bit of teeth in this argument. But in that same argument, who owns Facebook. If China walked in and bought up all the shares of Facebook, China now owns Facebook. And then, can you ban Facebook? And then if you can ban Facebook, well, what's to keep you from keeping the data? What's to keep you from saying, hey, Elon Musk is South African. Africa's trying to get our data.
Angola?
Africa is trying to get our data.
Just as long as it's not Angola.
Yeah, you know what? I think it's so horrible that they don't tell everybody how powerful it is that an African American actually owns the biggest platform in the world and wrote the biggest check in the world.
Dude, we have an African American president.
You're right, but how many people are going, hey, you know what? The biggest social media platform in the world is owned by an African American, Elon Musk. That's a true statement. But because his skin's around color, they're not going to ride that thing. Anyway, back to what's going on with TikTok. It did make it through the House, which blows me away. And if it makes it through the Senate, that's the big one. The president's already committed to signing it. But I'm like sitting here going, okay, so this is the first kind of stone at free speech. Because they are taking away your speech under the idea that the CCP has access to your data. But I can make the argument that it's not the CCP. That TikTok is owned by a whole bunch of hedge funds all across the world. And it does have its headquarters in China. ByteDance is the owner, is the head corporation or whatever. But it's a very strange situation, and if it makes it through Congress, I think it goes to the Supreme Court as unconstitutional because it's suppressing freedom of speech.
Hopefully.
I think so, but in the meantime, they're going to destroy it. Well, TikTok's going to be destroyed, and I don't want it to be, by the way. I love TikTok. I think it's great.
Well, in addition to free speech.
It made YouTube better, and it made Instagram better because they have to go compete with the big dog.
Yeah, but
yeah,
I guess the kids like it.
Yeah.
But it's not just the free speech. What else is in that bill? It's a bill now. It's a bill.
That's a very...
They went, slide that in, slide that in, slide that in, slide that in, slide that in.
It's a very
Biden's
ugly
get richer
part of politics. It's a very ugly part of politics is that they package everything together and they
sell you that one piece.
Mm-hmm.
They sell you that one
They're
piece.
Like, how many people want to save the kids? And everybody says, save the kids. By the way, we're sending $200 billion to Ukraine. But we're saving the kids.
Well, share this with me.
1 million.
I wasn't all the way there.
Mm-hmm.
Patriot Act.
Mm-hmm.
What did they sell us with Patriot Act, and what did we get?
Patriot Act. It's a very scary one. The Patriot Act said, okay, so here's where it gets weird. Patriot Act says, we got to protect you. You know what? We're about protecting Americans. Are you for protecting Americans? Sure. Okay, cool. Well, Patriot Act, here's one of the things that just drove me nuts. We're gonna approve what's called a 3-hop warrant. A 3-hop warrant is this. If we have one person that is talking a little bit of bad stuff. Okay, cool. A little bit of bad stuff. All right. So that's that's direct. Okay.
So I'm talking bad stuff.
Yeah, you're talking bad stuff. Okay. So then I'm allowed to go 3 people away to investigate everything and get full access to all their data. Now, wait a minute. What does that mean? Okay, cool. So you're talking, let's just say these 2 guys are bad guys and they're talking to each other. Okay,
like
cool.
I talk to Joe Rogan all the time.
You're talking to Joe Rogan, right? Cool. And then you call your dentist.
And I call my dentist.
Yes, you call your dentist. Okay, cool. So now that's 1 hop. Can they now get a subpoena or warrant to get everything from your dentist?
Yeah.
Yes, they can. Everything from your dentist. Okay, so that's 1 hop. Your dentist called one of his other patients who you don't even know, you have no connection to whatsoever.
That's not Joe Rogan because I have a connection.
It's not Joe Rogan. So now that's the 2nd hop. Mm-hmm. Now you're talking to Bill over there who doesn't know you, doesn't know anything that's going on, and the only tie you have is you both go to the same dentist. Now Bill is talking to somebody else, and they can now tap that other person. So that's a 3-hop warrant.
Who actually might be Biden.
Correct. So through the 3-hop warrant, that because it went through in a bill, people didn't understand this. It went through in a bill, and they're like, hey, we're going to protect your freedom. We need to be able to have a 3-hop warrant. And everybody's like, you know what? Let's pass this thing. Now, here's what happened. If anybody wanted anything, they can go 3 hops to anybody and get a warrant to go deep into anybody's private data. That and legal, totally legal.
And not affiliated.
When they finally figured it out, they said, hey, this Patriot Act thing, let's not do that anymore. And a bunch of lawsuits came about, and they finally got rid of it. They got rid of it, but they reintroduced it in different ways. But this is how the politicians hide shit from you, and it's just kind of a big scam, man. And it's ugly because, hey, if you're trying to make a living, a good person, family person, mom, dad, raising a kid, trying to do what's right, and you don't understand this, they're pulling the wool over your eyes every single day, and they say it's for your own good. That's what they say.
Like fluoride.
Yeah. Fluoride. Is that good for your own good? Helps your teeth. How many people still think? I mean, I did. I bought it hook, line, and sinker. I was like, thank God the government's looking out for me because I want to keep my teeth. Yeah, see,
Oh, yeah,
I want to keep my teeth. Yeah, the government's looking out for me, so they're putting fluoride into the water so that my teeth will stay strong. What the? Yeah. Now that time has passed, you're like, that's not why it's in there, and it's not even good for you at all. It's not good for your teeth. You shouldn't ingest it. It shouldn't be anywhere near you. It's poison, and they still put it in there. And if you ask most people, probably 40 years old or above, they're like, you know, there's fluoride in the water. They'll almost all say, "Oh yeah, it's good for you." They put it in for your teeth. And I'm like, okay, you still believe that shit? You still believe that shit?
Well, how bad is the aluminum in the deodorant?
Oh, it's horrible.
Is it though? Is it?
I'm not a scientist, so I don't know.
Well, here's what I know. We've all been using it for all these years. What's the side effect?
Men trying to chop off their dick. Sorry, I can't say that.
So that's the side effect?
I don't know, man. I don't know what the. So here's what it is.
That's the side. I'm done with it, man.
I'm done with
aluminum. I am not even gonna drink out of cans anymore.
Well, so when you do the V word, when you do the V word, there's aluminum in the first one, and the first one is for hepatitis. I don't know why they give a kid something for hepatitis. I do know why, because they needed to sell it, and they figured out how to put it on the schedule, and they sell it. So if you do all the vaccines all the things that you're supposed to, we're not supposed to say that. If you do all the things that you're supposed to do, that you tell you should do, you have over 1,000 times the FDA limit for a grown adult into a little one. Over 1,000 times. And I sit there going, how can this have happened? It just hurts my brain. It hurts my brain.
Big pharma.
Yep. It's crazy, man. This whole thing is crazy. How does that affect you buying a house? Zero down.
That helps zero down?
Yes.
So if you get zero down?
Well, think about it.
They tried to pay people.
They tried to pay them. They're like, they got a bunch of celebrities on board, and they're like, hey, I got it because it's fun. I got it because it's good. I got it because we should. I got it because it's fun. I got it because it's good.
I was in the Super Bowl. Look at me.
I'm sitting there going, I don't. You guys are trying too damn hard.
My girlfriend's Taylor Swift.
Yeah, it's like. Trust me, get into the van. I got candy. Come on, get into the van. I do like candy. Yeah, I got 3 different types.
I didn't even gonna lie.
3 times. 3 times of candy. You want to go in the van?
Can I eat it all?
Yes, you can eat it all.
Right.
Come on in the van.
Where's your van?
Air conditioning in the van.
Love it.
So, yeah, this stuff is going on, and the same thing is going on. The state of California has this thing called the Dream for All program.
Oh, I love this program.
And they say, hey, listen, you know what? Come on in. We're gonna help you. Yeah, we're gonna help you.
How are you gonna help me?
We're gonna help you.
How?
I'm gonna get you 100 grand.
100 G's.
100 G's. If you buy a $500,000 house, I'm gonna get you 100 G's.
Nice.
I'm gonna get you 100 G's. Yep.
That?
Come on board. 100 G's.
I can just keep that 100 grand.
Oh yeah. You can keep it as long as you live in the
I
house.
have to pay that?
Refinance. Wait. Don't get so crazy now.
Oh,
don't get crazy.
I do gotta pay it back.
Don't get crazy now. Don't get crazy. I'm not giving it to you.
Oh.
I want it back. I want every dime back. Every freaking dime of that 100 grand, I want it back.
Well, where do I get that 100 grand from?
We're gonna sell your house, dude.
I don't want to sell my house.
Well, you can refinance it if you want, but I want my 100 grand
back.
back.
I don't want to refinance.
And what's worse is I want interest off that 100. No, you know what? Forget interest. Appreciation is way more than interest. I'll take appreciation. So I want appreciation. So I'm giving you 100 grand. No, I'm not giving it to you. I'm lending you 100 grand at higher than interest rates. Higher than interest rates. And I want it back, and I have a first lien on your house. We're buddies.
Sounds like it. What if my mom owns a house?
Crazy, dude. And you know what? People are lining up. They're like, oh, can I do this? Can I do this? We're going to make it a lottery system.
Well, see, here's what
You have to put your name in. And if you're lucky and I like you, I will let you do this. Fuck, it's crazy, dude.
it's a marketing piece, guys.
It's so crazy.
It's all marketing. It's getting pushed. It's getting you excited. They're acting like it's new. They're acting like it's great.
It is so crazy.
Now, if you need this, I'm down for it. We can do it.
Yeah, I guess.
It's not a problem.
Yeah.
If this is something you
Yeah.
didn't have this, you wouldn't get into a house.
Yeah,
Sure,
yeah.
no problem. But for the rest of you that do have 20 grand saved, for the rest of you
Yeah.
that do have a means,
You're looking for your free money?
yeah, don't do it.
It's not free money.
don't need to.
It's not free money. It's not. None of these down payment assistance programs, not one, is one that I would go, hey, if I have the money, I'm going to use this anyway. Not
Actually,
one.
I
Not-
do know one.
Which one?
It's the pathway. I would do the pathway.
Would you?
The in-house. Oh, 100%. 100%. It's a gift. It doesn't reduce your buying power. You only need a 600 credit score. Yeah, I would do that one.
I'm going to have to dig into pathway.
Dig into it, man.
I haven't done a pathway. Have you done a pathway?
No, I want to.
Okay. Because the public isn't agreeing with us
Well,
at the moment.
it's new, and it's only here. That's why. Nobody knows
Okay.
about it.
Why would NAF give up that much money?
Why would they give
Why,
up that
why
much
would they?
money?
Yeah.
Maybe they need some write-offs, man. I don't know.
They need write.
I haven't seen their bank accounts.
They're like, hey, I need a few write-offs. I got to give some money away.
Like, you need $1 billion?
Yeah.
How about you?
Yeah, billion for you, billion for you. You could tell them, hey, the Kristen Lee Bahama Fund, right there. We're on it, man. Yeah.
I like the Bahamas.
I like the Bahamas too, man.
Aruba?
Jamaica. Ooh, I want to take you.
Key Largo?
Montego. Oh, God. Here we go. Here we go. Hey, you know what? We got to wrap it up. We're at the end of this. We've been Kristen Lee. We appreciate you. We are out.